taking Bitcoin in isolation of, putting all the other assets aside, we believe Bitcoin disrupts gold. We think it's a better gold if you look at the properties of money and what makes gold, scarcity. Bitcoin's actually fixed in supply. So it's better than scarce in gold. It's more portable, it's fungible, it's more, durable. It sort of equals or better gold across the board. So if you look at a $100 billion market cap today, now last week it might have been more like 200, but so it's actually a buying opportunity. We think that there's a potential appreciation of 30 to 40 times because you look at the gold market today, it's a $7 trillion market. And so a lot of people are starting to see that. They recognize the store of value properties. So we think regardless of the price moves in the last few weeks, it's still a very underappreciated asset.
And Bitcoin's just the first cut. And if Bitcoin's a better gold, imagine your financial system with only gold as an asset class. That's how sort of early in the beginning of this is. There's going to be a menu of many cryptocurrencies, and they're going to rethink the entire internet and how we sort of view it. You could never buy a piece of the internet back in the 90s. You couldn't buy the protocols. You could invest in a VC firm on Sand Hill Road that had to pick Amazon versus Pets.com. So you had to get lucky. You had to be very privileged and get lucky many times to get it. Now you can just buy a piece of the protocol. So buying Bitcoin is like a call option on the entire Bitcoin ecosystem. A Bitcoin company will not work out before Bitcoin works out itself first. So the ultimate Bitcoin bet is Bitcoin, or the ultimate Ethereum bet is Ether. And you're basically buying a piece of the racetrack. And you're not picking, Seabiscuit. Doesn't matter who wins as long as the races are running. You're a part of it. And that's the beauty here. And usually the retail investors come in at the end. They get dumped this stuff post-IPO, 10 years after a company was founded. Now retail has been the ones who have been there first. And actually Wall Street is completely asleep at the wheel and late to the game. Silicon Valley has actually completely missed it too. People in Silicon Valley and the companies have maybe personally got it. Some VCs have personally invested in coins, but they structurally were unable to had to invest in C Corps. And so buying gold or buying Bitcoin is not something they do, but the partners were investing their own money. And Silicon Valley very much missed cryptocurrency because they want to miss it. It's not good for the centralized application layer, the FANG companies that sit on top of the internet. Cryptocurrencies actually decentralize that, pull it all down to the layer below, the protocol layer, and the value actually accrues to the people who buy into and use and build the network. Not one company, there's not a headquarters of Bitcoin or Ethereum. These are networks that are decentralized and owned by, in a very democratic way, the users of them.